Once you have your home picked out under contract and you've selected your loan type, the next question you have to ask is, when should I lock my interest rate? A lock doesn't come automatically. Either you're doing one of two things. Either you're locking your loan or you're floating your loan. And it's really important to have this conversation with your loan officer. So, in a typical rate lock, you lock your loan for usually 30 days, although 15 days are possible and 45 days are possible, etc. So in locking your loan, what you're doing is, if market rates increase, no matter how high they increase, you've secured your rate lock for that 30-day period, saying that you're going to go to closing within that 30 days. And even if interest rates were to go into the double digits, you're locked and secured and you have that rate. If interest rates go down, typically you don't take advantage of the downside on the mortgage rates decreasing, especially if they decrease by 0.125. However, if they do decrease by a quarter percentage point plus, I have the option of A, as a mortgage broker lender, switching banks if there's enough time to get your loan closed to do so. Typically I need a couple weeks. Or B, I negotiate your loan with the lender for a float down product, meaning we get a better interest rate, we float down the rate. We have a typical float down policy of, if markets say improve 0.5%, you'll get the benefit of half of that. So you'll get a quarter percentage point off your rate. So then what you do is you take away the upside of interest rates increasing by locking your rate, and you secure the ability to benefit by 1/2 if there is a decrease in interest rates. So this is really important to talk to with your lender to find out what is their policy after you lock your rate if interest rates improve. Banks most definitely don't have the opportunity to switch banks, to switch loan types, to switch anything if you've locked the rate. So you want to find out that if markets improve, what is that advantage for you? I typically like to lock my clients' interest rates because a 30-day window isn't a lot of time to play the market, and so it's kind of unwise for me to leave your loan floating up until your closing. It's very risky for you. On the other hand, if you're doing new construction, or if you are locking, or if your contract to close is greater than 45 days, then sometimes we'll option to float the rate because your construction is not going to be done for 6 to 12 months, or your closing isn't happening for almost 60 days. Then it might make more sense to float that rate till we get into the 30-day window. All right, so if you want a mortgage pro, give me a call. I can help with purchases, refinances, cash out in multiple states, and I'm here to serve my clients. Thank you and have an amazing day.